Hey guys, welcome back to the channel. In today's video, we're going to be talking about how to invest in stocks, also going over the personal methods that I use, which have served me very well through time with the investment options. Now, really investing in stocks, guys, fundamentally, it is investing into a single company. So if you look out there at some of the largest, if you look at Apple, if you look at Google, if you look at Meta, if you look at individual stocks, that is what a lot of people really do invest in, is personalized stake in a company. In my opinion, guys, this is the only way you can truly build wealth when it comes to wealth generation. Real estate that you physically own, the real estate, the property, you have the asset, or buying stocks is really, again, the really big way to create wealth. When you look at some of the wealthiest people within America or even within the world, they own an incredible amount of stocks, which is ownership in companies. A lot of companies do pay you back not only in dividends, which we'll get into, but they also pay you back in stock appreciation. So even where, let's say you buy a stock at $100, it goes up to $150. That stock is still now worth $50 more than what you originally paid for it. You can see this with your 401k plans. You can see this with your investment accounts if you already have them. Let me know in the comments down below exactly what your methodology is and how you do it. So getting into the 6 steps of investing into stocks. Number 1, guys, you want to invest in the stock market, which the earlier you do this, the more you can commit to it, the more time that you have. You can get compounding interest, you can get compounding dividends. There are a lot of different things that you can get, but this is where you really need to make some tough decisions, because there are 3 choices within here that you can really go to. 1, you want to choose stocks, funds, ETFs, bonds, whatever it may be on your own, which again, we're going to talk about. 2, you can pay someone to do this for you, a financial advisor, which I am not. I am not a certified financial advisor. Definitely seek out professional if you are going that method. The third part, guys, is the 401k funds that you can talk to. For instance, ours is managed through CUNA Mutual. CUNA Mutual offers a complete set of stocks and bonds that they have available that you can kind of pick and choose for. You can also talk to those advisors for free, and they will set up and build you a portfolio. So deciding to invest, you have to decide exactly the methodology that you're going to do. Now, number 2, choosing to invest. Now, choosing an investment account, this is very important, guys, because there are an incredible amount of competitive companies that are looking for your money with the investment accounts. Me personally, I use M1 Finance. I have found them absolutely phenomenal. I actually use them. I have checking in there. I have a credit card with them that I pay off every 2 weeks. We also do have investment accounts there that are invested in the stock market with no fees for trading, which I absolutely love. Link is down below, guys, if you do want to invest with M1 Finance. But you're going to have to choose exactly who you're going to use, research that company, go back, research it again, guys, because you want to make sure where you're putting your money is going to be, 1, a legitimate institution, and 2, what kind of backing do they have? What kind of things that do they offer? There's some that are stocks, there's some that are bonds. Again, depending if they are running full brokerage, in what you can really invest in, and if they have robo advisors. So a lot of people do like the automation when it comes to the computer generated, the AI technology, to go ahead and invest your money that way. Again, it is really the amount that you are comfortable with when it comes to this investment strategy. So number 3, learning the difference between stocks and funds. This is really, again, where we kind of break the dividend or break apart the track, because you can invest in individual stocks. With this, it can be a lot riskier if you don't do a lot of research into the companies, kind of their direction. A lot of people do not invest in individual stocks just because, again, the liability. So if I'm investing 100% into Apple, fundamentally, Apple has a lawsuit for whatever reason, the cost or the value of the stock drops dramatically. Chances are, for a majority of people, they will pull out of that stock and that will be it. They will be tainted from that one experience. What I personally invest in is ETFs. Now, ETFs are an absolute group of funds that are put together, and specifically, I invest in the VOO, which is the Vanguard S&P 500 fund, and I invest in a couple other funds, which I'm going to show you in some upcoming videos. But the S&P 500 takes the 500 largest companies within the United States, puts all of them together in a fund, and you literally invest in all of those companies. This gives you the ability to really minimize risk because it is spread up against all 500 companies. If one fail, two fail, five fail, you still have an offsetting. In addition, it is spread between the markets. When you look at, all of the different sectors of the markets, putting them into something like an ETF of the S&P 500, I highly advise looking at the cost structure, looking at the return that it's getting. It is good to basically get started into if you're not looking into going into individual funds. But there's a ton out there, guys. This is one of the areas where you really do have to do your due diligence. You really have to do your research. If you're investing, again, in individual companies, spend your time. Now, number 4 gets into setting a budget for your investments. This is really where you have to look at your budget. Guys, we know 50-30-20 rule, 20% is debt repayment and investments. So you'll know exactly how much you're putting into the stock market every single month. My recommendation is putting it automatically in there on a bi-weekly or monthly basis. You will not even realize that the money is gone. Let's say you start out, you're putting $50 in there every single paycheck. It goes automatically to your investment account where it automatically gets invested. Awesome. That is definitely a solid way to kind of set it and forget it. You know what it's invested in. Again, I use S&P 500 funds. I love how they're diversified and kind of how it's built. But you can also see, again, if it's going to be in stocks and where to start investing. Again, do your research on where you're going to put your money. Number 5, long-term. This is one of the biggest things that people do not realize. The average stock market return is about 10% per year. I don't know any banks, any credit unions, any financial institutions that are giving on average 10% returns, period. Again, I don't see the returns that are coming in from a lot of other financial institutions that are the 10% short of being in the stock market. Now, one thing for the long-term planning when you're putting money into the stock market, guys, is consistency. That is really it. Again, if you're putting $50 every 2 weeks in there, you're putting $100 a month. So you have $1,200 invested at the end of a full year. Well, second year, you got 24, 36, 48. You see where this is going, guys. So even on the up years, the down years, average is about a 10% return. After 5-10 years, you can have a very significant chunk of money invested into the stock market, which, as we know, the first $100,000 that you're making is always the most difficult to invest. Final one, guys, managing your stock portfolio. This, again, is one where it is the more of a hands-off approach depending on what you put into it. I don't go in there every day and look at it and say, hey, is it up today? Is it down today? Where's it going? And am I moving it here? Am I moving it into mutual funds? Am I going into individual stocks? There's a lot of things to really consider. What style of investment you're essentially, what style of investor you're going to be. But again, I do like those S&P 500 stocks because proven track record, they know exactly what they're doing. If companies do get smaller, they're dropped out. If companies get larger, they'll get moved in, so on and so forth. It is really a big investment game. So the bottom line on this, guys, it can be very daunting for beginners. And that's why I say you should watch and do your research, guys. Make sure that you're looking at companies. Make sure that you're looking at, even investment companies, like you're looking at Vanguard, you're looking at Charles Schwab, you're looking at all of these different companies, seeing exactly how they are kind of built, how it's set up, what you can invest in. There is just an absolute insane amount of information that you could probably never consume. But when you look at some of the greats, guys, when you look at the Warren Buffetts, when you look at the Charlie Mungers, when you look at those, they have books, they have blogs, they have a lot of information about those guys that are super successful when it comes to trading in the stock market, buying and selling, holding, things of that nature. But again, even Warren Buffett has famously said, low-cost S&P 500 ETFs is the best investment for a majority of Americans to make. Choosing individual stock is only if you believe in the company that you're purchasing from. But again, I do like that S&P 500. Sorry, guys, so that'll do it for today's video. This is going to be our basic kind of introductory video towards the stocks, really getting to know them, starting to do your research. I'm going to go through, I'm going to show you everything that we have on M1 on the upcoming videos If you like the content, guys, go ahead and subscribe to the channel. We have a lot more coming. And as always, thank you guys for watching.